Welcome back to the channel, everyone. Today I want to talk about what indicators and what verifiable truth we can use to help us tell if the short squeeze or when the short squeeze has actually started. How we can be certain that it's not just another options fake out or another gamma ramp up, and that it's actually the MOAS. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, by now you'll have noticed that basically every single week we get faked out with an options ramp up, where those market makers ramp the gamma, they push the price of AMC up, ready to crush it again on the Friday. This way, obviously, everybody starts buying into options at the start of the week as they run the price up, but then they crush the price back down on the Friday, ensuring that all of our options expire worthless. But when the real squeeze does start, how can we actually be sure that it's the genuine squeeze and not just another options fake out or another gamma ramp up? So what I've got here is the 4 different stages of the short squeeze and some different indicators we can use, and have a look at that visually represented on a chart here. Obviously the first stage is this gamma ramp up. This is what the market makers do every single week, ramping the gamma up, pushing the price of AMC up, ready for them to crush it again on the Friday. Now, even though at the moment the hedgies or the market makers are responsible for causing this gamma ramp up, it is still the first stage of the squeeze and isn't always going to be caused by the hedgies. As you can see from the start, this first stage is the price of AMC moving upwards, whether that's caused by the hedgies creating their gamma ramp, whether it's caused by a certain trigger like a liquidation or by an NFT dividend or whatever that trigger may be. The price of AMC will start moving up for one reason or another, and gamma will start to ramp. Maybe it's going to be the hedgies' fault, or maybe there'll be a certain trigger that sets it off. Now, the second stage after that gamma ramp is the FOMO or the FOMO ramp, where more and more people get clue or get wind of AMC and GameStop moving upwards, and they buy in as well for the potential squeeze. Now, obviously, we saw this happen in January of 2021. We saw it happen in June of 2021 as well. And we've seen it a few times since then, like when AMC recently ran up to $34 per share. This is where more and more people jump on that gamma ramp or that natural AMC price movement upwards, and they continue to buy more and more shares and more options. Now again, whether this gamma ramp or this AMC price movement upwards and the FOMO on top of that, where it gets compounded, the hedgies are still somewhat in control, as obviously they could pull some nefarious tactics to push the price back down. Now I think these areas of gamma ramp and FOMO are going to be anywhere up to and including say $50 to $70 per share. I think anywhere before $50 to $70 per share, not all of the hedgies will be liquidated, and some of the market makers, like Citadel for example, will still have the power to push the price of AMC back down. I think in this territory where you have AMC naturally moving upwards, or it looks like another potential gamma ramp or gamma fake out, those hedgies are still in control, and we need to be really careful. We need to be really careful because we haven't yet had any sure signs of confirmation that the squeeze has actually started. Now after this second stage, the FOMO stage, we have the official gamma squeeze stage. This is where the price of AMC is running up so quickly that the gamma in the options chain is running up at a rapid rate. This is where these market makers have to hedge for more and more options. Not only the additional options that are being purchased, but because the price of AMC is running up so high, they have to also hedge further up the options chain. Chances are that these market makers aren't already hedged and aren't holding enough AMC shares, and therefore when the FOMO and the gamma ramping compounds and more options are purchased, the hedgies or the market makers will have to hedge and purchase the underlying shares. This obviously compounds the run up and causes more and more shares to be purchased. It causes the price to run up higher and higher and causes even more hedging. Now during this gamma squeeze phase, it's likely the hedgies and the market makers are still somewhat in control because the hedgies haven't yet been liquidated at this point. AMC will likely be running over $70, potentially over $100 before we start seeing any liquidations, and until that point, the hedgies are still somewhat in control and we're still in that gamma squeeze territory. Now I think in terms of prices for those phases, in terms of phase 1, I think we're going to see AMC run to around $40 during that initial gamma ramping. Guys, if you haven't already, be sure to sign up to Moomoo using the link in the description below to get up to 5 free shares worth up to $2,500 each, which is $12,500 in free shares. Moomoo and Futu have also officially announced that they do not accept payment for order flow, and therefore Moomoo is brilliant for buying AMC. Moomoo was also recently given the award of being the best trading platform because it's incredibly easy to use, it's very customizable, and it's also completely commission free. Over $40 I think is where the FOMO is going to start flooding in, and that'll push AMC up to $75 or $100 per share. We're then going to start seeing the price of AMC run up so rapidly that it causes the gamma squeeze, which takes us to say $150 to $200 per share before the major wave of liquidations starts kicking in. And then when we officially have that major wave of liquidations, we're officially then in short squeeze territory. Obviously, the definition of a short squeeze is where the price runs up so fast the hedge funds end up being liquidated, or the shorts ends up being liquidated and being squeezed. Therefore, it can't officially be caused a short squeeze until these shorts end up being liquidated and forced to cover. If the shorts knowingly close out of their position and do so either profitably or at a loss but don't end up being liquidated, it's not really officially a short squeeze. So therefore, phase 4 in the squeeze doesn't really start until we actually see some liquidations. And then obviously stage 5 is the mother of all short squeezes, when the squeeze has been squoze, and when it's been squozed so high that it's broken records, that's when it can officially be titled the mother of all short squeezes. Now obviously in terms of how long and what price we're going to see in phase 4 and phase 5, it's difficult to say because I think there's too many variables, such as how many synthetics there really are, and just if the SEC and the Fed will end up getting involved. Now obviously in one of my recent videos I did talk about how much money the shorts actually have to pay for the squeeze and just how high AMC could potentially run. In the future I'm going to make more videos on what prices we're likely to see the most. But obviously for this video I more wanted to talk about specifically how we can tell what phase of the squeeze we're in and how to tell when the squeeze officially starts. So I think we now know what different phases we have during the squeeze. We've got the gamma ramping, or the initial move upwards, we've got the FOMO, we've got the official gamma squeeze, we've got the short squeeze, and then we've got the officially titled mother of all short squeezes. We also kind of know what prices we're likely to see during each of those phases. I think AMC is going to naturally or unnaturally run to around $40 per share before the FOMO starts flooding in. When AMC reaches $75 to $100 per share, that's when the price will be moving so fast the official gamma squeeze will start, and we'll start seeing those liquidations at say $150 to $200 per share. And then obviously when we see that wave of liquidations, all of these hedge funds being liquidated and forced to cover their billions of synthetic shares, that's when you have the short squeeze. But other than price, what specific indicators can we actually look at to know when the shorts are actually being squozed? How can we tell when they're actually being liquidated and we're actually in this official 4th phase? Obviously, I'm saying that shorts are going to be liquidated at $150 to $200 per share, but the truth of the matter is, I don't actually know. I haven't asked Ken Griffin at what his AMC liquidation point actually is. I haven't asked Susquehanna or any of these prime brokers or any of these other short hedge funds what their liquidation points are. It's only an assumption. So if they're going to get liquidated before $150 per share or after $200 per share, what specific indicators can we actually look at? Now, obviously, we have the kind of Ortex indicators like short interest, like utilization, like number of shares on loan, or the percentage of shares on loan, or the days to cover. Now, I think while these indicators are actually indicators and they will be useful, they're only useful to a certain extent because this data is obviously delayed. Hedge funds report on a T+2 basis and they also self-report data. All of the data that Ortex collects is self-reported directly from Citadel. And we know that Citadel and Ken Griffin have lied a number of times over, so it wouldn't surprise me if he lies about the self-reported data. There's a reason why Ortex only shows 100 to 150 million shares shorted and not 2 billion shares shorted, because it's self-reported. And therefore, while it will be useful to know when the legit shorts start to cover, it won't really be useful to tell us when the synthetics are being covered. What will be useful to tell us when the synthetics are being covered is the bankruptcies and the liquidations. But again, I think they're only going to be useful to a certain extent. When a hedge fund is going bankrupt and when it's being liquidated, they don't report 20 seconds after that liquidation point is hit. It's usually reported in the mainstream media, maybe a few days later. We didn't know that Archegos was being liquidated until the majority of the position had already been liquidated and these prime brokers had already recognised their losses. And therefore we're likely not going to know when these hedge funds are being liquidated until a few days after they've been liquidated, when the squeeze has already likely squoze. Again, they're going to be useful to tell us when AMC has squozed, but they're only going to be useful after the fact. Similarly to January and similarly to June, I do think that AMC and GameStop squeezes are going to be a multi-day event. Obviously, when AMC ran up back in June, it didn't just happen on that singular date on the 2nd of June. It happened a few days prior and a few days after. And again, the same in January. The squeeze didn't just happen on the 28th of January. It happened on the 27th, the 26th, and a few days before, and a few days after again. And therefore, I think the most useful indicator is going to be the overall panic and the overall sentiment in the market. We're going to see reports from Robinhood and from Webull. We're going to see activity like these sketchier brokers taking away the buy button. And we're going to hear lots of reports of different conversations going on behind closed doors. Back in January, we knew that Robinhood was struggling and we knew they were having conversations behind closed doors. It was all over Reddit, it was all over Twitter, it was all over YouTube, and it was well known. I think again, when we start hearing these conversations, when we start seeing this panic, when we start seeing the buy buttons being taken away by sketchier brokers, that again is when we know the squeeze is happening. And I think when we start seeing more and more and more panic, and we start seeing more and more and more brokers really struggling, that's when we know we're past that third phase, which is the gamma squeeze, and into the official short squeeze. Again, when we start seeing that first wave of liquidations and that first wave of hedge funds going under, we know that more hedge funds are going to follow, and we know that we're officially in that short squeeze territory. So I think it's going to be a case of looking at all of these indicators. We're going to have to look at AMC's specific price. We're going to have to look at the panic and these conversations behind closed doors. We're going to have to keep an eye on the buy button and keep an eye on these headlines for major liquidations. When we start seeing those smaller liquidations, we know that bigger liquidations and major liquidations will follow, and that's how we know we're in the short squeeze. Many of you have asked, Tom, when the time comes and we do squeeze, will you be live streaming and will you be keeping us up to date with this data? Will you be telling us what the price of AMC is? Will you be telling us about these conversations behind closed doors? And will you be bringing these major headlines to our attention? The answer is obviously yes. When AMC squeezes, I will be live streaming all day. I will be keeping an eye out for these important headlines and news articles. And I will be keeping an eye out for these conversations going on behind closed doors. I'll be sure to constantly alert you to what I'm seeing and also recap what I've seen throughout the day and how AMC has been behaving. And therefore, hopefully, if you can only tune in for a short time period, maybe it's only 10 or 15 minutes, I can still catch you all up to speed of exactly what's been happening while AMC is squeezing. So guys, be sure to leave a comment down below and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.